I want you to picture for a moment exactly what your life would look like if you were a millionaire. The truth is, you would have a lot of the same concerns, consistently working hard to grow as a person and develop fruitful, loving relationships all around you. Your greatest concern in life would still be your health and the health of those around you. There would be one main difference though, and it's an important one. You would no longer have to worry about money. You would have the freedom to do what you wanted, when you wanted. You would have control. Financial freedom is the freedom to be able to make choices. The choices about what you do with your most precious resource, your time, who you spend it with, and where and what you do with it. I want you to open yourself up as we begin to talk about what it takes to become rich trading Forex. Forex traders are often very concerned with how much money they can make and how quickly they can make it. And each day and each trading session is approached as almost the improbable or impossible. The reason I want to share this formula with you is because it's very important to have the correct mindset, the mindset of an investor. And it's important to focus on this formula for the bigger picture. And this is going to help you to be able to execute, which is what you need to do in order to achieve your goals. You need to be able to execute. So let's take a look. Starting with a $3,000 balance. All right. And we're looking at having a 2.5% return monthly for the next 10 years. Now this is over a 10-year period, and you're looking at turning $3,000 in just 10 years to $58,000. Pretty good, but that's nowhere close to being rich. Now, what happens if you were to add a $100 deposit monthly? Okay, there's a little bit of a difference, right? Now, what happens if you were to do two things? What happens if you were to add $250 a month for the next year, for the next 10 years? All right, now you're looking at $246,000. This is a little bit better as far as a savings account, but this is not going to, be meeting your goals as far as achieving any type of wealth. Well, let's just look 5 years out, 5 years later. All right, that's pretty good. That's pretty good. Now, take a look at this. You're making every year at this point $286,000. All right. That's 15 years from now. That's starting with a small account, starting with $3,000 and having a return that is phenomenal, but you can do it. Now, the reason why it's important to focus on the bigger picture here is because often a trader with a relatively small account is trying to trade way too aggressively. Instead of controlling their risk, they're aiming for type of returns daily, weekly, and monthly that are just not possible. And if that same trader, if you're able to have a plan in place and able to view the larger picture of what you're working for, then all of a sudden, each trading session and each trade and each day, there's a lot less pressure on you because you're looking more on a weekly, monthly, and yearly scale, not each individual trade and each day. So the correct mindset to have is that of an investor and of a saver. Do whatever you have to do to make those regular deposits. Whether it's $100 a month or $200 or $250 or $500 a month, whatever you can do, whatever you need to do in order to make those regular deposits, the first several years, they're going to make a big difference in your overall performance. And that's why it's important to focus on this formula. If you need to, then every day before you sit down and start trading, review this formula in order to review your goals and ingrain it in yourself, what you're trying to achieve, what you're working towards. That trader is going to have a much greater chance of meeting their goals and achieving this great success. It'll help give you the proper perspective of what it is you're looking to achieve for a longer term. And it's going to help give you the discipline you need not to make silly mistakes, to stick to the plan, to stick to the rules, because execution is everything.
Let's start this off. And first, I think we had some conversation yesterday in the CTM chat group that was really important, and we were talking about what our goals are. And I think it's really important of having those goals in sight as you start out. We'll briefly discuss goals of the program and the goals that you should be having for yourselves, right? It's really important to have that goal in mind when you're working towards something. And the first goal is turning the corner to profitability. There's no question about that. And from my experience, I'm seeing anywhere between 3 and 6 weeks, people people are able to start at least following the trading strategy in the course and go to where they are slightly profitable to break even traders, which in itself is a really good feat. And that's the timeline that you should be able to achieve that in. It should be somewhere between 3 and 6 weeks, right? The next phase is then mic check. What's going on, everyone? Good morning. Great morning. So happy to be here with you all on this Friday, doing what we do together each and every day, staying focused across all the markets, especially on the most important trade that matters. In this episode today, we're going to be looking at a few different things. I love you all. I love you all. So yeah, that video intro, absolute pure signal fire. One of the most important foundational pieces that you could understand as you begin your journey, or whether or not you just pause on your journey and kind of refocus what you should be looking at, what your time preference and frame should be, and how you're going to get there. Should it be played occasionally? Should it be played weekly? If it were played daily, I'm sure a lot more people would be seeing massive success. And massive success we see across CTM, that's for sure, changing lives. Before we look at the bullish case for Bitcoin, before we look at the bear view right now of Bitcoin, I want to share something very important with you, and that's to make sure that you gain the perspective that you should have right now where we are. You're looking at the halving event, right? That important factor that sets off the cycle of Bitcoin. Every 4 years, the miners' reward cut in half for confirming the Bitcoin network, the most secure decentralized network in the entire universe. Then you're looking at current price right now, and you're seeing so far to date, we have a 267% return as we are currently in mid-cycle. Whether or not the mid-cycle low has been put in, or we take out that low and make a lower low, nobody yet knows. We don't know that. But if you go ahead and you looked at what happened 4 years ago in July, let's take a look at that. And you see the halving event from 2016, and you saw where we were mid-cycle in July, right? 2 days earlier, you see that we also had a 260% return. Now, the reason I show that to you right now is to help you understand by the way, if you're new here, welcome. And if you're not, welcome back. This is Jordan with Conquer Trading and Investing. It is so good that you are here. Actually, go ahead and subscribe right now and make sure that you continue to follow the content that we put out weekly, Monday through Friday, 9 o'clock a.m. Eastern Time. There's a link below in the description if you want to get notified from Telegram when we go live. What else? What do we? 260% last cycle from the halving event to mid-cycle. Now, one thing is different over here. By the way, 2 days later, this thing popped, right? This thing popped up, and then all of a sudden, you know, where we are today, July 23rd, 4 years ago, price was up 320% off of that halving. Price seemingly going vertical over here in this area. And this, my friends, is what? This was the most important trend line in crypto, 4 years ago. Now, price came up hard and fast where obviously this is ahead. Oh, wait a second. So we're looking at this breaking the most important trend line in crypto. We know that right now we're well under the most important trend line in crypto, and the return was actually the same. So by the time we're getting up to the most important trend line in crypto, that's actually going to be a higher return before the breakout. Interesting, because what price did from this area over here, it went up another 10x. It went up by December of 2017. Price had gone up approximately 10x from where it were. If that were to happen right now, and you were to see price go up 10x, now again, this is lagging. When we get up into the most important trend line in crypto, is that closer to 300? I don't want to do the math right now. We'll do it as we get there, because I don't know that we're going up into the most important trend line in crypto yet. Is it only a matter of time? Absolutely, in my opinion. Not financial advice. Yeah, Nate, could you go ahead and by the way, could you smash the thumbs up button here, y'all? Let's get us going over here. Time put in here to make sure that everyone stays focused with the necessary mindset and skills in order to go ahead and not only ride the bull of all bulls, but like Matador, right? I'm talking about like finesse. All right. So, where does that bring us to? $300,000 Bitcoin. People right now, you saw what happened as we were mid-cycle, right? A lot of people the fear's running rampant. Retail, by the way, is selling all their Bitcoin. Everyone who bought Bitcoin over the last few months, over the last, since January, they're selling their Bitcoin during this particular port. Now, everyone else prior to that, they're actually adding to their Bitcoin. And the whales who were distributing over here during this period, ever since price made that new all-time high above 20,000, as we got into 30,000 and 60,000, they were selling. They were taking some off the table, distributing to that new retail that was buying over here. And then that new retail, they dumped their Bitcoin, they sold it. But now these larger whales, these larger wallets have been buying their Bitcoin. That's what's going on over here. How do we get there? What's going on? Let's be clear. A lot of people wavering right now. A lot of people wondering, is even $140,000 possible this cycle? Oh no, since I don't believe it's maybe in 2022, I maintain my prediction, the range over here of $260,000 to $410,000. Right? Now, does that mean that we can't trade above $400,000? Absolutely not. Of course we can. This is my predicted range that we're going to be in. It doesn't mean that's where price is going to be. And by the way, my sweet spot is between 250,000 and 320,000, right? Now, could price be above it? Of course. Could price trade under that? Yeah. I did the math from the beginning. $160,000 is diminishing returns. And if I could reach 140,000, mission accomplished. Everything I set out to do back when I began presenting this to you in 2019, not only the bullish case for Bitcoin, but what happens this coming cycle based off the halving event, right? All right, let's bring it back in over here. And you can see with that perspective of where we might be going. What are the bears looking at today? The bears right now feel like they're in control for sure, right? And now that control has lasted ever since price really broke this $50,000 range. And then we saw this large impulse down. So the bear move really occurred within 48 hours. It was between this $50,000 and then dump into $35,000. And since we've been in this downward sloping tight range. Now, if you look at this yellow line in the sand over here, this is a neckline highlighted. You see over here, this is the right shoulder, the left shoulder, excuse me. And then over here is the head. And then over here, we have a right shoulder. So this is the neckline that I have highlighted. And this is broken down, right? It broke down. It's come up for a retest. It confirmed that broken neckline support as resistance, and then prices come off and made a lower low. So if you're bearish on Bitcoin, by the way, this pattern, if it does go ahead and play out and meet its projected targets, you're looking at Bitcoin trading down to $4,000, right? So that's what the bears might be targeting for a measured move over here. Is that it? Yeah, $4,000 to the downside. There's a lot of room to go to the downside if you're looking for that head and shoulders to play out, right? And the bears are pretty comfortable right now. They're saying, all right, I'm below the neckline. Yep, that's the bearish case for Bitcoin. You have to wonder if you are bearish though. You did pierce the neckline over here, came back above it. All right, we came back down again. This time it held, but we didn't really see any follow through. We saw the lower low, but price is already higher than that previous swing low. Right? So it's neutral. I would be not bearish. I would be very neutral if I was a bear. And obviously the bears, they're feeling the heat turn up a little bit. They feel it. Are you seeing some short covering? Yep. If you break down over here, here's a little bit of support for you. Then we could be resuming down harder and faster at a much faster pace. But that's not happening right now, right? And if you look at what the bulls are looking at, right? By the way, this is the bullish case for Bitcoin, that we're going to break out of this descending wedge, right? That after the breakout, we're going to come in and test the most important trend line in crypto. And then soon after that, that's when this thing really starts running again. And by the time we take out $65,000, was it this week that we did the video on how long until we break $64,500 or the previous week. Each and every day, the videos put out are pure signal. Pure signal. People are, asking, you have to invest your time. And if you're not yet subscribed to the channel, make sure you subscribe to the channel. Spend the time over the weekend watching any video. Pick a headline that you see. Watch any video that's been produced ever on this channel, by the way, or just over the last couple of weeks. By the way, over this last week, what have you seen? Before the breakout, and by the way, we do have a breakout outside of this descending wedge. We'll take a look at that in 1 second. But before the breakout of that descending wedge, you started seeing something change over the last 5 weeks on this channel, right? What I started saying is, look, the bull of all bulls it's getting ready to run. And then after that, I let you know the risk is now to the upside. And then after that, I said, you know what? How long until we break $64,500? And here we are. We're getting going. We're not there yet. Right now, let's take a look at what could happen in the near term over here. The next 72 hours, are they crucial? Let's take a look at it. Right now, the bulls have actually broken outside this descending wedge. Now, some people are looking at this pattern and they're saying, hey, that's nothing more than a bear flag. Well, bear flags, by the way, they slope upwards. That would be a bear flag. That's a continuation pattern. This is a nice, beautiful bear flag right here. You see the down move, then you see the bear flag right over here, and then the breakdown. So this over here that we're seeing right now, it's not sloping upwards, it's sloping downwards, right? Now, it's not a bull flag. And by the way, we see bull flags all the time. Here's a beautiful bull flag right there. You see the move upward, beautiful bull flag, sloping downward, and then the breakout to the upside. We're seeing a descending wedge. Now, normally, this is a bullish pattern when it breaks out to the upside. Now, is that what we're seeing here right now? If we zoom in pretty quickly, we don't have to zoom in quickly. We could do it slowly. Let's just zoom in for a second, and you can see that. Yeah, let me come up to the candles, break out some candles for you. And you could see, let me jump to the 8-hour for you. You could see clearly, I could see it all in the 2-hour. I want to make sure you see it. You could see the breakout, the retest, and then the resumption off, right? Very, very clean, very clear. Jordan, but you're not using the wicks. Yep, I'm not using the wicks. I'm using the bodies. You can see the bodies over here, the touch over here to the top, and that's how I have it. If you put it on the 2-hour, you can see how clean that is. Let me zoom in. You could see that I ignored that spike up and I went off the tops over here. That happened to be then resistance over here. And then again, there's another spike up, but I'm going off of this. Breakout, retest, resumption. The trend line has been in there well before the breakout. So I feel comfortable leaving it there right now. So what does that mean next? Well, if this is going to resume off over here, where's the volume? Well, I don't consult volume. You never find volume on my charts. Is volume a leading indicator or a lagging indicator, right? Well, price is the only leading indicator. We all know that. We follow price. And if this does break outside to the upside today with any type of follow through, when you're looking at your chart tomorrow, you're going to see the volume was a little higher than yesterday or a lot higher, but the volume will show up later, right? So what are we looking at now? If this is a failed breakout to the upside, right? What are you using yourself? Are you taking this trade, by the way? Before we go any further, right? Before we go any further, this is still very unclear. What's he talking about now? He just said that this thing is bullish, that we're going to see new all-time high this cycle, and now he's telling me, that things are unclear. Yeah. You see this line over here, the most important trend line in crypto? Until price breaks above it, things remain unclear. And it's been a while now since we first announced. It was May the 14th. I said everything is unclear. You're going on now into June, into 2 months. And again, early and as early as can be, right? And now this line over here, the most important trend line in crypto, until we break above it, things are still unclear. Now, breaking outside this descending wedge, are things clearer? Yes. They're a lot clearer because you can now define your risk. What does that mean, define my risk? All right, let's take a look at it. If this is to break down, you have 2 opportunities to manage your risk. You could have your stop below the bottom over here. You're dead wrong if that is to occur. Or you could have this a lot tighter. You could have it underneath. Let me take that magnet off because the lines I'm drawing are going funky town. I want them straight. You could have your stop loss under that last swing low over here, right? Or you could have your stop loss over here. Both are correct, right? It's up to you to decide how you're managing and setting your risk. Now, up into the most important trend line that matters. But Jordan, what about the resistance around 4,000? I understand that we've been trading in a sideways range, and a lot of traders might see a little bit of light resistance over there around 4,000. That's not what I'm focused in on. I'm drowning out the noise, and that line around there is just noise. You'll see when we get to it. What I'm focused in on over here is this. This is a big deal. If you're taking a swing trade right now, right? By the way, if you are taking a swing trade right now, you understand you don't have momentum with you. Momentum returns to the bullish case for Bitcoin once we break the most important trend line in crypto, and then you have momentum at your back. Now, it's possible this breakout of this descending wedge here sends us up pretty hard and quickly into the most important trend line in crypto. That's entirely possible, right? Now, it could also be a little bit slow, right? But right now you have a technical breakout, which means that you could easily set your risk, and the reward just into that resistance of the most important trend line in crypto is massively higher. Even if you use the stop loss where you know you're dead wrong, that's approximately a 4.5 to 1 risk to reward ratio. That is really good trade to take, or at least from a risk to reward perspective. What happens if we break down over here? What happens if actually we break down outside this wedge? Well, how about this? Right now we're breaking to the upside, right? And if we roll over and break down, then we'll look at the price targets together. I sent out a tweet yesterday. You can check the profile of my Twitter. The link is in the description below, and you'll see where that target is to the downside if we actually break outside of this consolidation pattern to the downside. So bulls here, they have every right to feel a little bit hopeful, right? There's nothing wrong with that. Hope's a beautiful thing, right? And for sure, right? But not only hope, I mean, these guys are on the right side, right? Up since the halving, 250%, sitting very beautiful on this mid-cycle shakeout over here. 53% drawdown from the all-time high. Whales accumulating again. We're halfway through the summer, right? When it's only a matter of time, in my opinion, not financial advice. Like, you got to do your own research. All right, what else are we looking at over here? This is Ian's beautiful chart work over here. Now, we don't know, by the way, you have to view this from many different vantage points. When I say this, I mean Bitcoin, right? One thing's for certain, we know that every 4 years, they cut the miner's reward in half. All right, well, since that's happened, every time since that's happened, the conversation comes up, well, the halving's already priced in. The market's efficient. And each and every time, those who didn't take that view have been proven correct so far. So we could use a few different things, right? The year of the bull helped me see again, charts BTC, again, the pioneer, lining this up from the bottoms, lining each cycle up from the bottom low. A beautiful way to view it. Big shout out, year of the bull, misconfig, out on Twitter. Make sure you give them a follow. Then we said, all right, once price makes new all-time highs, again, charts BTC, pioneer, Ian, picking up on it hard. Once price makes the new all-time highs, the rational route, this is his thesis as well, you have to start lining these cycles up and looking at it from that vantage point also, because from the time they made the new all-time high into the cycle peak, it was within 5 days of each other. You have to consult that. And then here at CTM, we've been saying ever since that, listen, I think that we need to line these things up off of the low of the mid-cycle shakeout, right? And if we were to do that, if the low is in right now, and we are looking at the potential low being over here, right, June the 20th, right, as price made that lowest low outside that mid-cycle over here, and beginning to line this stuff up using that, let me find my chart. There it is. There's Ian's chart over here. You could see the projected path possibly going forward. Now, what Ian's doing over here with this purple line is saying, listen, I can't predict price. That's not possible, right? But if we're by the 25th of October, remember that date we put out here just a week ago when we did how long before we get into there, 28th of October, right? That was
from my understanding, the latest date that we should be making new all-time high here on Bitcoin, taking out 64,500. Now, that's not to say it doesn't happen sooner. It could happen a lot sooner, right? Especially if outside this descending wedge, we pick up momentum and come into the most important trend line in crypto and break out of that soon. These two blue lines were just the projected range of us possibly making new all-time highs. We don't know when it's going to happen, nor are we trying to predict when it's going to happen. But he's saying by that time, price should be back within this projected range of the previous two cycles. If that's occurring, from there into the close, these line up nicely. How can we not consult that? Of course we need to consult that, right? Ian, thanks. This is lining them up from the bottom over here, cycle bottom, right? And you're seeing the difference in that price now is definitely underperforming the previous cycle. Both of these, 2017, 2021, or 2017, we went up 10x. From July the 20th until December the 17th, we did a 10x on Bitcoin. Are people wondering if that's still possible? A lot of people are thinking, a lot of people are giving up on Bitcoin. A lot of people are capitulating, in their thesis, in their views, across the board. You're going to have to look back and remember who was there the whole time with the clarity and who got it right. Who wavered, who held strong, right? This is the markets, you don't get the opportunity to be on the wrong side of the trade for too long. All right, what else? This is why we have the most beautiful model over here. Ted, able to add another update yesterday. Grateful for all of your hard work and talent over here using, lining up off over here the cycle low. Jesse's been doing a lot of contributions, adding to that, holding firm over there. Let's see as we go up, because once we break the most important trend line in crypto, right, this is the best guide that I believe is out there. Not because we expect the price to repeat what happened in the first cycle over here in light blue. Not because we expect it to repeat what happened in the previous cycle, 2016, in dark blue, right? Here we are in white. Only because this is the only data we have to work off of. And it just so happens that if in the past, again, as price appreciated after that supply shock of the halving, as price went on to that three phases, a bull market phase, a bear market phase, and an accumulation phase. Does price play out similarly this time? I certainly think so. It's the thesis that I've been working off of. It's the thesis that got me in early, and it's the thesis that's has helped me to hold with that awareness. I'm looking at Bitcoin here on the 3-day, and it looks massively bullish. Now, we came off a really big wave over here, a really big wave, and we see in the past bull market, here's the double wave. This is where we most closely resemble right now. Let me let you look at them both, right? You can see over here as price came off, the top of that wave peaking out. This is where we are right now. You see how price came all the way down, and then the trend CCI leveled out over here? You can see it's been quite a while, Is the market getting ready to resume out of here? It's been a while since we peaked. The wave came off, and the trend CCI over here stabilizing, right? Now we got a while to that cycle peak yet to come. It looks like the bull's getting ready to run. We have the marker. We know when it's going to break down. We'll be watching what happens on the downside over here if we break down and take out this lows, right? We could trade lower. We're able then to trade to clone the most important trend line in crypto, right? I'm going to go ahead and I'll clone it with you, and then I'll bring this down over here up. I'm on a log chart. That's not going to work. Let me back that up 1 second, get off the log. Let me reclone that for you, right? And just, I'm not going to do it now. It's on the Twitter if you want to check out. I'm just going to tell you what I'm going to do. I'm going to go ahead and clone this line over here, and then I'm going to be looking where we spiked into the low. I'm going to be doing this actually off of the candle chart. All right, there we go. Remember I talked to you about how we spiked below over here? Price wicked below, and then afterwards it started holding 1, 2, 3 times. That's why I keep my line off there. I'm not going to go off the low of the wick. The markets are fluid. The markets are not a machine, right? The markets are constantly evolving every millisecond of the day, pricing in all sorts of information. I got to let it misprice here for a moment, figure out where the medium is, and then you can see going forward, it's working off that medium. That would be the support I would be looking at if we broke down to the downside where price could potentially hold. That would be the guide I have. It's only an opportunity to manage my risk off of it. All right. What else? Let's keep going over here. Scott, been back testing your work versus others. Great content, right? Then he goes back over here, pulls up this video from September 2020. You should do the same. By the way, Jesse's did it before Jesse joined CTM, before he joined the inner circle over here on Discord. He went ahead and he back tested everything I said in the past in the videos. And he's like, wow, right? Called it so well. If I was, back checking your work, Jordan, right side of the trade, you would have led me well had I known about you. And that's the thing, Scott. That I'm not telling you what to do. Now, I am teaching you how to see the markets. I am teaching you how to think for yourself. I am thinking you to view things differently than everyone else, but I'm teaching you how to do it yourself. And yeah, the work that we do here each and every day, of course, that provides the base. And it's there for you to use as a guide to decide what decisions you're going to make, right? But it's really helpful looking back and saying, wow, this guy's got a strong history across all asset classes of really being on the right side. And actually, it's hard to find someone else out there that has such a record. Scott, thanks for that. I appreciate that. Go back and watch and pick any video. Go back a year and a half. Go back, watch a year. Go back 3 months. Go back 6 months. Go watch it all and find out why you should be invested where you are. Stranger in my own land. CTM, could you speak to new hodlers about what percentages to keep on exchanges versus DeFi versus a hardware wallet? So there's a saying in Bitcoin, right? Not your keys, not your Bitcoin. What does that mean? If you're allowing someone to hold your keys, if you have third-party risk, whether or not that's an exchange, right? Is DeFi third-party risk? Well, what happens if the platform fails? It's happened. I've seen a lot of people lose a lot of money in DeFi as it's an infant working itself out, In exchange, same difference. The exchange could get hacked. You could lose your Bitcoin. The exchange could go under. It's happened a lot of times. The only time your Bitcoin is safe is when you won't hold your own keys. And at that point, you're responsible for your own security. There are a lot of people who rather hold their coins on Coinbase because they don't want to deal with their own security. And that's not wrong or bad. The same way that you hold money with, Chase Manhattan Bank or with Fidelity or Robinhood or whatever broker you're using. That's a third-party risk as well, except you feel comfortable about taking that risk. And should you about, whether or not you're using Gemini or whoever you feel comfortable, BlockFi, about that third-party, you have to understand that third-party risk. If BlockFi goes under, does Gemini go under, being that they all use the same counterparty risk for themselves? What about Binance? I know they pay high interest for when you stake coins there. I don't know how they do it though. That's unknown risk. With BlockFi, it's a little more vague but more transparent. It's still third-party risk. Anytime you're holding money on exchanges, you have to understand that the same way, never invest more money than you feel that you could afford to lose. Same thing with an exchange. At different times of each cycle, you'll have different amounts in a hardware wallet and different amounts on an exchange, right? Prior to the bull market beginning, the amount of money I had on an exchange was very low compared to where it was during that cycle peak, that mid-cycle peak. It had grown significantly, right? And then at different point, then you saw in the video I did, where I was showing you my BlockFi investment and how I did it, how was it in April, May, the first week of May, where I withdrew money off there. It changes. It's something that you need to think about yourself, and it's something that you have to be comfortable. You're asking the right question, but you need to go ahead and study with someone who's an expert on wallet security. If you don't feel comfortable being in control of your own money, then you need to do the research until you are. You have to understand how to back up a seed phrase, where you store that seed phrase. Are you storing that in multiple geographic locations? Is it written on steel so that, the paper is what? I mean, if you write it on a paper, that paper could be compromised. It could get wet, it could burn in a fire. You really need to think about all these things. You could use a service like Casa Hodl, and use multi-sig services, but you're asking the right questions and you have the time. You have to do the research and feel comfortable about it. Now I focus in on price, right? This is my forte. I'm not a person who would say, hey, listen, I'm a security expert. My operational security is top notch. Not anything like that. Now I've been around for a while. I've been around for a minute, right? By the way, I've spent a lot of time, for over a year, every Friday listening to, Matt Odell and, out on Tales from the Crypt podcast. If you haven't heard Marty Bent and Matt Odell sit down together and just have some whiskey and talk about Bitcoin, I really think you should invest the time in doing that and understand that aspect of Bitcoin. It's very, very important. All right. What's going on, everyone? Let's take a look. Let me take a look. Let's play some honeymoon. Let me catch up with some comments and see where we take this next on this Friday session here, CTM all day long. Yeah, hey, we're gonna take a look at the markets in 1 second. All right, we got some good stuff to talk about. I want to take a look at the markets over here. Nasdaq, S&P 500, the dollar as well. Before we do that, Adam's right. Everyone is a genius in a bull market. Actually, it's not even that, So from my experience, or from what I've seen happen over these past few months, is this. What I saw is that not everyone was a genius in a bull market. Actually, very few over here were able to see what was coming and position correctly. In this area over here, a lot of people became introduced to it. But what I noticed over here in this particular area, after the move down, in this area over here, that like everyone became an expert during a dip. All of a sudden, like the bears became loud and angry and heard. Now, we do have people like Peter Brandt. Is that his name? You guys all know Peter Brandt. And he said around this point that he was looking for Bitcoin to come off and to come off towards $20,000. He's the few. He's one of the people out there who was able to go ahead and there was the Wyckoff guy who, as price broke down, then matched it up and said, hey, that's the Wyckoff. There were people in CTM being like, hey, Jordan, isn't this Wyckoff as it was developing, right? There were people aware of their surroundings and what was going on, but you've seen people get loud and angry where we currently are right now. Let's hope that continues. Let's hope they stay on the right side over here. There are very few, by the way, over here mid-cycle who are able to hold their view, their thesis, their opinion of what was happening and why. William Clemente, he's one of them. Who else is there? There's the crypto bird or burb, right? Obviously there's myself. There's Misconfig, the year of the bull. But there are very few that I know of who we'll see going forward. And remember, who was calling over here, lengthening cycles, right? Is that a lot of people pivoted here to lengthening cycles, not thinking that it's possible from where we are in July up until the end of 2021 to be trading above, $200,000. Yeah, well, I think we're trading well above $200,000. We will see, but I've held all of my analysis. The only thing that I did to change my analysis throughout this bull market were two things, right? At the end of December, early January, I pivoted from $160,000 diminishing returns to we're seeing actually price not putting in diminishing returns, but increasing returns to last cycle. And that's why I have my sweet spot in this whole area over here of where I think that price is going to end up. Now it's my math is done, my trading is done, so that if I hit $140,000, I accomplished everything that I set out to do, but I'm going to take as much as is available, right? Did we enter lengthening cycles? A lot of people are thinking, this is not going to happen. So lengthening cycles gives us time. Listen, I consulted. We had Ken on here to have a conversation about what lengthening cycles might possibly look like. I'm aware of it. I don't think it's happening. It's not my base case. Now, is this cycle going to be like 50 days longer than the last one? Well, that's within the deviation. I expect something like that could definitely happen. We're watching. We're waiting. This is why Ted's amazing work over here gives us such clarity, right? We just know what's happening right now in white, and then we could overlay from different vantage points other price behavior and past cycles to see where we expect that trajectory to take us by what time. It's the best guide that I know of out there. We'll see as we move forward about how useful it becomes for all of us here at CTM. I want to take a look at some other markets over here, right? Gino, not really talking about what would happen if the S&P or the equity markets had a correction. Reason being, I told you all as we got into that first quarter 2021 that Bitcoin was going to break correlations. And it's apparent and it's clear as day. By the way, when you see price coming off of $17,000 and moving into $40,000, that's vertical. People are like, you didn't draw these lines vertical enough, right? Well, if you haven't seen Bitcoin move vertical, that's what it looks like. Well, then shortly thereafter, from the beginning of February, when price was at $33,000, $32,000, and then it moved into $57,000. I mean, it did that vertically. You usually staircase up and elevator down. Well, this was staircase down and it's elevator up. Bitcoin during its bull market phase, watch out. When she gets going, she's going to fly. Now, is it, if we see a sharp move off over here, right? At that point, depending on what price, you understand that it could still be quick and it could be sharp and that it could still be a V, right? Now, listen, I was burnt by the fire. There's no question about that. I thought this was the V, this move down over here, and I thought the V was in, right? When then price then rejected, I was like, oh, that's not a V. I'm wrong. As soon as possible, getting on the right side. And because I understand, the interweb and the people on the internet, and I understand that there's a lot of geniuses out there, Adam. Right? Adam's nailing it. For real, Adam. There's a lot of geniuses out there. And if I tell people here, listen, it's going to be sharp, it's going to be quick, and it's ultimately going to be a V, I can't do that. If we were all here together and we were enjoying some coffee and doing it, I would let you know what's up. But hey, listen, anyway, it's the markets. Anything could happen. Listen, you have to make your own decisions. You have to think for yourself. You have to value, those who have a history of being correct and use that as a vantage point to make up your own mind and your own decisions. But you have to be careful if you don't have much experience. Those that don't have experience buying into Bitcoin and then selling it, their time preference was way out of whack. And by the way, if you're buying Bitcoin, right? And I don't know, but I know from my own personal experience, if you're making an investment in Bitcoin, like how much were you willing to risk? If you took, let's say, a quarter of your life savings, or you took 10% of your life savings, right? By the way, I put 50% of my life savings, of my net worth, with 5 kids at the time, with a wife, into Bitcoin, right? How much were you willing to risk? Were you looking to lose 20%, 50%, or were you all in? I assume that before you made the investment, that's the first question you asked yourself. And if it wasn't, that's where you need to start today. What potentially are you looking at? People are talking about $500,000. People are talking about $100,000 Bitcoin. People are talking about $500,000 Bitcoin, and people are talking about $1 million Bitcoin. Ray Dalio, right, the founder of Bridgewater, the largest hedge fund in the world, is like, forget bonds, I'm buying Bitcoin. Paul Tudor Jones, one of the greatest legends on all of Wall Street, I am buying Bitcoin. Stanley Druckenmiller, the best trader that's ever lived on Wall Street, 30% gains for over 30 years in a row. He's the one who architected the trade that took down the Bank of England, working under George Soros's quantum fund at the time. And he's like, I'm buying Bitcoin. Is it not enough to make you want to understand why these people are buying Bitcoin at this particular time? It's much safer in 2021 than it was in 2016. In 2016, by the way, when I got interested in Bitcoin, it looked like it was over. It looked like it was over. It was the summer, and price was just like, it had been a long bear market. Price was just trading at $250 thereabouts, right? We didn't know what the future regulation was going to be. If you look at what's happening right now in Bitcoin, you're seeing massive, the founder of the New York Stock Exchange, ICE, moving in and starting Bitcoin, right? Starting a Bitcoin exchange. Listen, anyway, let me look at the markets. S&P 500 over here. Let me jump down and start on the 8-hour time frame. Is it printing new all-time highs? I can't really tell. I'm going to come over to my candles, and all I could say is this. I did not myself, as price came into that support, tell anyone that they should be buying support, right? Now, all of you who are following, trading equities, you knew if this line broke at that point, that's a bad technical break, and then we're targeting around that area over here. If we lose that, this thing could really start correcting, right? It wound up holding that support, right? That's good. And then you can see that prices come back over here, testing into the new all-time highs. The Nasdaq, a little bit different. And I could have done this better. This is what I want to talk about. By the way, from what we did talk about the Nasdaq, as it was, we said, watch out. This is where you close any open trades. That was done perfectly, right? And then price coming down. And we said, listen, this could come up, and it could come up all the way to where it is right now. This is the analysis we gave. And I said, if it resumes off over here, that's providing an opportunity over here to short. And that also is perfect analysis, right? It's what's happening right now. Whether or not anyone took this short this morning, I don't know, but everyone had the game plan going in because it's what we spoke about this week. What I could have done better is this, though, right? What I'm going to do is I'm going to clone this trend line over here, right? And then I'm going to place it over here because I check just to see. And then you could see it. Just let me start there. Let me do it. Then we'll go forward, because for me, visually is the way to go. All right. This is what I could have done better. And everyone knows what we did and how we did it, right? So lining it up off of the support over there, I could see, well, wait, over here in this particular area back in June, this was actually support. We had a touch over there. When it broke past it, it spiked up, briefly provided resistance. And then over here was another touch. Over here was another touch. I mean, to be going blind without this line, and it's not just that line, you should have a line under it also like this, right? That was a mistake on my part, right? There should also be a line over here, right? I mean, if price breaks this line, then you could go ahead and add that. But, you know, listen, let me be easy on myself. I was on vacation, and I'm not trading the Nasdaq. Nevertheless, we look at it from afar, far enough to do it better than anyone else. And if we're going to do it better than everyone else, let's make sure that we have that awareness that we need across the board. And that was missing in this case, right? That trend line should have been in there. So I'm going to leave it in there now. And I know if we break it at any point in the future, that we want to have one off of these touches as well, right? So, but the analysis we gave, this was the place to take profits, and we held, right? This was Jerome Powell, the meeting. Everyone thought markets were going to crash. We perfect analysis, getting people to hold for another 6-7% to the upside. I mean, that was a better improvement than last summer. Last summer on equity markets, I'm like, all right, all objectives met, going sideways, getting on the sidelines. They're risky now. And then price, the same thing. It melted up 6%. It happened the same exact thing at the same, and I didn't participate in that. And I said, that was a mistake, even though price then came right back down. And at the end of the day, like, yeah, the markets were very volatile and risky at that particular point. To miss the melt up is to leave a lot on the table, right? That would be like taking profit at $140,000, mission accomplished, instead of letting price let you know where the exit was, right? But this year we did it very well, getting that extra money over there, getting out and then saying, look, this is the opportunity over here. If you're looking to go short, you're resuming off your your risk to reward, because you got to get out if price makes the new all-time high. You got to get out. But your risk to reward now, just coming back into the support, is intense and immense. You'll get a few of those that fall into profit. Don't expect to get everyone. All right, what about the DXY? DXY showing us a beautiful breakout of the trend line, the trend line. It is a trend line. It's also the neckline of this inverse head and shoulders. You've seen the breakout occur, and then a perfect retest, and price resuming off of it right now. Entirely bullish. Of course, it needs to make to make the resumption. It needs to finally break out to that new swing high, and then at that point, it looks like we're off and we're on. Dollar strengthening over here. What does that mean to the equity markets? What does that mean to Bitcoin? Listen, we looked at and viewed just from afar, if you're just joining us, under the conditions when the dollar has performed its strongest. Each and every time Bitcoin outperformed during that strong dollar period. Something to be reminded of in case you're worried about what a strong dollar would do. If you're worried about, and this is Gino's question, that was a roundabout way to get to the answer, my friend. If you're worried about what's going to happen if the equity market's correct, the same way that I told you, the same way that I told you in the first quarter 2021, Bitcoin was going to break all correlations, and it did it massively. I also always said also in the third quarter 2021. I never mentioned anything about the second quarter. I sincerely didn't. And everyone listening, if you know that, smash the like button. I never said anything about the second quarter, right? And here we are, second quarter, consolidating. In the third quarter, it's going to happen again. Bitcoin's going to break all correlations unless there's some type of like massive risk into the markets. And the markets are always fighting off risk, by the way. The markets are always climbing that wall of worry. It's what the markets do, right? But people are always worried about the wall of worry, and they're always looking for the top. Stop trying to call the top. Stop trying to call the top. Get on the right side of the trade. Go back and watch those videos, and you will see how sharply we've been on the right side of the trade across all markets. All right, everyone. Good Friday session over here. Thanks for the support. Thanks for smashing the like button and helping this channel out over here. It looks like we're resuming out. Everyone should have the clarity they need this weekend. We do know the risk if you're bullish right now because we've broken outside of that descending wedge to the upside. You're watching and waiting, and it's a failure getting below this line. That's the line in the sand. You know you're wrong if price breaks below that. And if we have a fake out to the upside and then break down, whoa, it could get ugly, and it will get ugly fast if that happens. I believe that. I believe it will get ugly fast if that happens. But if you're bearish right now, look, a lot of bears have to be lightening up on their position. You got to respect price. And price is breaking outside this trend line. It's breaking outside the descending wedge to the upside, right? So you're going to see a portion of bears who have gone ahead and they have, managed their risk perfectly, right? Getting outside their trade. And well done. And there are a bunch of bears who are going to hold on, and they'll hold probably all the way into the most important trend line in crypto. That could be a battle right there, and this is the opportunity. If I was bearish on Bitcoin, this is where I would look to attack it, right? That's the place to look for some type of battle between the bulls and the bears, and depending on what happens there, we'll see. Once the most important trend line in crypto breaks, it's on, right? That's not right now. This is a lot. This is hope for the bulls. They have a technical breakout of a bullish pattern, descending wedge, and it's in play right now. Watch out to see if that's a fake out, and then we come back down. Then the bears, it'll be bloody. All right, that's what you need going into the weekend, right? Thanks for spending the time together, everyone. Thanks for making me a better person. Thanks for spreading the love that you do. I'm grateful for each and every one of you. I know the lives that we changed. I know the lives that we will change. It's like a ripple effect, right? The CTM, like a little pebble thrown into the middle of a river, and then the ripples are going out there into the world, and that's how we're changing lives and changing the world. And I see it happen. CTM, like they spark a change in someone's life, and that person is out there, and they're the spark that's changing other people's lives. I see it everywhere, and it's beautiful. That's the vantage point I have over here. Have a beautiful day, everyone. Right? Thank you, Danielle. Enjoy your weekend, and I'll see you all on Monday.